This video is about the Dynasty Wealth Investing community. Our research indicates that the next 5 years will be the best ever for an investor to create dynasty wealth within a diversified portfolio of companies having the potential to increase by 100% per year and multiply 10 to 100 times by 2020. Until the economy began the transition to digital in 1996, it had never been possible for an investor to build dynasty wealth from a diversified portfolio. $10,000 invested in both AOL and Yahoo in 1996 appreciated to $32 million and $2 million respectively. The only way to generate dynasty wealth prior to that would have required being a neighbor of Steve Jobs or Bill Gates. There are 3 industries that have emerged since 1996 which created multiple dynasty wealth opportunities. They include web infrastructure in 1996, social media in 2003, and smartphone apps in 2008. Between 1996 and 2000, the share prices of companies that provided the infrastructure, products, and services to the fast-growing web user base, Yahoo, Amazon, eBay, and VeriSign, multiplied between 36 and 205 times in price. Social media companies LinkedIn, MySpace, Facebook, and Yelp created billions of dynasty wealth liquidity within 2 to 8 years after they were founded. $500,000 invested for 10% by Facebook's first investor in 2004 grew to $1.1 billion by 2010. That's dynasty wealth in just 6 years. Smartphone app companies Uber, Spotify, Airbnb, and WhatsApp each generated billions of dollars of dynasty wealth within 6 years after they were founded. Dynasty Wealth Investing has identified 8 major categories now emerging that together could produce more than 1,000 dynasty wealth building opportunities by 2020. They are renewable energy, Internet of Things, social investing, crowdfunding infrastructure providers, cannabis infrastructure providers, online gaming, smartphone apps, and fantasy sports. Dynasty Wealth projects that it will have approximately 20 private or public companies by the end of 2015 and 300 by the end of 2018. The crowdfunding infrastructure demand in the graph on the right is projected to grow even faster in the next 4 years than the web infrastructure demand grew between 1996 and 2000. Legalized marijuana, which increased by 76% in 2014, is the fastest growing industry in the U.S. Mobile device company Ericsson projects that the global number of smartphone users will double between 2014 and 2018, which will further accelerate the need for new smartphone apps to be developed. First mover and disruptor opportunities are extremely rare. They can get to billion-dollar valuations instantly. Amazon, eBay, Yahoo, Uber, Airbnb, and WhatsApp are just a few of the first movers and disruptors which got to billion-dollar valuations shortly after they were founded. Ongoing research that covers the company after the investment is made is even more important than finding the opportunity. Without ongoing research, an investor will resist holding and will take profits much too quickly. In the 12-month period after its IPO, eBay's share price multiplied by 36 times. However, it's very unlikely that few, if any, made 36 times their investment, since research on eBay was scarce back then. A senior analyst on the team is Michael Markowski. He was named by Fortune magazine as one of its 50 great investors. Michael Markowski was also a columnist for Equities magazine between 2004 and 2010. In his September 2007 article, he predicted the crash of the USA's 5 largest brokerage firms, including Lehman, Bear Stearns, and Merrill Lynch. The prediction was made a year before Lehman filed for bankruptcy, and at the time, the shares of all of them were near their all-time highs. In another 2010 article, Mr. Markowski highlighted 2 industries that he believed were very undervalued. He recommended 12 members of those 2 industries. On the article's 5th year anniversary, the shares of all but one of the companies had increased in price. The top performer increased by 310%, and the lone worst performer declined by only 7%. These results were very relevant. They demonstrate Michael's track record in identifying and recommending entire industries which outperform the market. Michael is the analyst who identified the newly emerging industries which could produce 1,000 or more dynasty wealth building opportunities. Included on the Dynasty Wealth team is Dr. Richard Swart. He is an advisor on crowdfunding to the World Bank, White House, U.S. Congress, the ECC, and British Parliament. He has advised the Gates and Rockefeller Foundations and the SEC, and is a leading member of UC Berkeley Haas School of Management. Dr. Swart also has deep frontline experience. He has been a successful principal of a web tech startup and an officer of a VC subsidiary that built a tech portfolio and experienced 3 IPOs. Davies Gutman, another of Dynasty Wealth's team members, has been applauded as one of Europe's leading investment newsletter writers. Over a 28-year period, he has averaged an 18% return annually. The Dynasty Wealth team has over 150 years of combined experience in the capital markets and were employed by some of Wall Street's most well-known firms during their careers. There are 2 ways an investor can produce dynasty wealth. An investor can purchase through the stock market the shares of public companies having the potential to multiply by 10 times in 5 years. And an investor can purchase private offerings directly from a public or private company having the potential to multiply by 100 to 1,000 times in 5 years. The Dynasty Wealth Investing community provides free access to public company recommendations and ongoing research reports. Paying members have exclusive access to private offering opportunities. Participating in private or pre-IPO offerings are the key for returns of 100 to 1,000 times from an investment opportunity. Those who invested into Yahoo, Amazon, and eBay prior to their IPOs had opportunities to make 1,000 times their investment by 1999. Just $10,000 invested into Facebook's first $500,000 private offering in 2004 increased to $23 million at Facebook's first 2010 liquidity event, and to $430 million at year-end 2014. $10,000 invested into Uber's 2010 private offering was valued at $102 million in 2015. That equates to a multiple of 10,000 times investment within 5 years. Membership registration and additional information about Dynasty Wealth and its memberships is available at dynastywealth.com. Additionally, we highly recommend that you watch the 3.5-minute video on first movers.